Good afternoon, ladies and gentlemen, and welcome to the Eurosif EU Sustainable Finance Update for the month of June. The next event in our series of short monthly updates on what's happening in the area of sustainable finance policy in the EU. My name is Victor van Hoorn. I'm the Executive Director of Eurosif, and today, as usual, we will try in the next 30 minutes to walk you through recent updates, recent point of discussion, what's going on, and also, try answering questions. So do not hesitate to ask questions via the Q&A or chat function, and we will seek to address them as they come along or at the end of the session. For today, our focus is on the what we know might happen around the renewed EU Sustainable Finance Strategy expected now in the next couple of weeks. We'll provide you a short update on what's going on the EU taxonomy front. We'll provide you a quick update on some of the, what we understand to be the next milestones in the work of the EU Sustainable Finance Platform. Short overview, and then a short overview of the green bond, EU green bond standard proposal, which is also expected in a couple of weeks' time, based on draft legislative text that we've seen. So to start off for today, now it seems very much confirmed that we will see on the 6th of July the new EU Sustainable Finance Strategy published. The purpose of that policy document is it will set out, like the 2018 Action Plan on Sustainable Finance did, it will set out for the period 2021 to 2024 the work program of the Commission, the European Commission in the area of sustainable finance, with a number of work stream policy actions and milestones to be completed during that period. As we discussed in our last update a month ago, some of the key themes around that will be focused on risks of sustainability matters for the financial stability, for the financial system, so more the prudential side of things. There will also be a focus on the transition. So how do you finance the transition of the economy from here to the net zero climate objectives in line with the EU Green Deal, and the international dimension. How do you ensure that what the EU is doing is not completely isolated in a vacuum from other developments beyond the EU's border. Beyond that, there will be, in conjunction with that strategy, we understand a number of concrete measures proposed. First amongst which it will be this EU Green Bond Standard, to which we'll come back a bit later during the presentation in more detail. We're also expecting to see simultaneously with the strategy the final version of the Article 8 delegated act of the taxonomy, so the reporting requirements for companies. We'll touch upon that in a minute as well. And we may see simultaneously the adoption of the SFDR regulatory technical standard. It might be at that stage that we'll see a combination of the first package of technical standards which the ESAs delivered back to the Commission in February, as well as the technical standards the ESAs are currently finalizing, which covers the taxonomy alignment part of the technical standards around Article 5 and 6 of the taxonomy. And I think here on SFDR, we'll just make a short parenthesis here to dwell upon rumors and speculations that have been flourishing recently around is the Commission, is the EU going to respond to this letter by the ESAs, which dates from January, which sought to ask for clarification on a number of the key concepts in the level 1 text. Our understanding at this stage is that the European Commission, as we highlighted a month ago, is definitely going to publish a set of questions and answers that might come very soon, still in this month or early July. So it's a matter of a couple of weeks from now, where they will dwell on a number of the questions the ESAs had raised in their letter of January. Unlike what has been reported in some media outlets, our understanding is there will be no quantifiable or quantified thresholds for product categories, as might have been, the rumor might have been circulating. That will not be the case, simply because giving such an interpretation will not be aligned with the level 1 text of the legislation. Separately, so that's what we expect on the SFDR. Just want to take the opportunity here to also say, as Eurosif, we've been quite busy liaising with the European Commission on the new sustainable finance strategy, through our iterations of our work with our public policy group in Eurosif. And some of the key issues that have emerged are really a need for some kind of minimum standardization around ESG fund products, particularly in light of the fact that we are seeing an increasing number of local guidance or interpretations around what products have to satisfy, with the answers in each jurisdiction and throughout the EU always being slightly different, which carries a real risk of market fragmentation. We believe that still striving for a European solution, possibly through another review in the next couple of years of the SFDR to make sure that some of the key terminology is clarified, will be something that's quite necessary. Second thing for us very important is the focus on engagement and stewardship. That becomes an increasingly used and influential tool for investors to have some impact and to try and orchestrate some change with investee companies. Currently, we believe that the EU framework for that, chiefly the Shareholder Rights Directive 2, might need some updating and some provisions. Third point is there's a clear need for definitions around the concept of net zero by companies when engaging in net zero commitments, particularly when it comes to much more transparency, disclosure, and consistency around scenarios used, sectoral decarbonization pathways used, and assumptions, for example, around the use of carbon offsetting to make those commitments aligned. And finally, we believe that some work around bringing data providers in the regulatory perimeter, just to ensure more consistent transparency on data use, data quality methodologies, and potential governance issues would be something welcome. And here we need to emphasize very clearly, we're not talking about harmonization of any kind of methodologies for any ESG data solutions, but more transparency and consistency across solutions. Moving on now to quick update on what's going on with the EU taxonomy. As you recall, in April, we saw the Commission propose and divulge the 2 delegated acts on climate mitigation and adaptation. The texts were formally adopted on the 4th of June. Why the slight time gap between the two? Because in the EU, those proposals always need to be translated in all official languages of the EU before they can be formally adopted. And why does the formal adoption matter? Because that is the date which triggers then the scrutiny period for the co-legislators, the European Parliament and the Council, to indicate whether they object or not to the proposal by the Commission. As you may recall, in the case of the taxonomy, it's what we call the 4+2 rules, a period of 4 months, plus a possible extension by 2 months once, if the co-legislator deemed it's necessary to have more time to establish their positions. Bearing in mind that in the EU context, the summer months don't count, it means that the co-legislators would have normally until the end of this year to make up their mind on climate mitigation and climate adaptation. Why it's important is because it's now very much confirmed that in the same period of time, we will see the delegated acts on climate mitigation and adaptation covering some of the more contentious sectors like natural gas, nuclear energy, and agriculture, as well as potentially a legislative proposal by the European Commission on how to stimulate transition finance or hard to decarbonize sectors. So all those initiatives may just appear at the same time on the policymaking agenda of the Commission. And one thing that we are definitely seeing, particularly in the European Parliament, is that the discussions on the taxonomy are starting to spill over and become intertwined with other pieces of EU legislation that may, on the face of it, have very little to do with taxonomy, but in substance address some of the same underlying policy issues. We're preparing for a revision of the Renewable Energy Directive, the RED 2, RED 3, which will come later in the summer. There are discussions on the T10E regulation, the Trans-European Energy Networks, and how to feed in renewable energies in that. And of course, as we discussed last time, a month ago, on the 14th of July, we should see the Fit for 55 package, which is a large package of legislative measures on the energy sector, which includes, amongst other things, a revision of the European emissions trading system. So what we're seeing is a taxonomy, and the decision on that is becoming very much interconnected and intertwined with all those other pieces of legislation targeting, a lot energy policy and renewables. So we'll have to see how the balance is done between those different legislation and what it means for the taxonomy in terms of political decision making, and by which time we can have certainty on the substance of those rules and what we consider as a sustainable economic activity under the taxonomy. In parallel to that, obviously, over the month, until the beginning of this month, we had a consultation running on the famous Article 8 Taxonomy Delegated Act, which lays out the reporting requirements for non-financial as well as financial companies that are subject to those obligations. Just to recall, non-financial companies will be expected to disclose over time their turnover, capex, opex, and for financial companies, the European supervisory agencies, ESMA, IOPA, and the EBA over the last months developed similar and alternative metrics to measure the level of alignment of financial companies vis-a-vis the taxonomy. Important to note for financial companies is that for the calculation of the ratio of alignment, in the current proposal from the Commission that was being discussed, exposures such as sovereign bonds were completely excluded from the calculation, and also potentially SMEs, exposure to SMEs, which is particularly relevant for banks, were excluded from the calculation, all with the idea of mitigating the impact of red tape on those small and medium-sized enterprises. And here it's fair to say that the latest discussion here is around issues of scope of the use of estimates and the sequencing of obligations. As in terms of policy, we are clearly policymakers are now in the final stretch of finalizing those rules. The Commission is having to deal with questions around the scope. So which companies report on taxonomy alignment, and for those that don't report, particularly companies that are too small, as well as non-European companies. We shouldn't forget that currently estimates are that within the assets under management of European investment funds, around 60% of the invested capital is outside the EU, so in companies not subject to the NFRD, or in the future to CSRD once it has been agreed. So it means that we're currently in a situation that as the draft text stand, they clearly say you can only use for calculating your taxonomy alignment numbers from companies subject to the NFRD, which means that this is a real issue for investment funds that will potentially, on average, not be able to even take into account around roughly 60 to 65% of assets under management, simply because they are in companies outside the EU. If you add that, if you add SMEs to that, it is over 2/3 of assets under management where investment funds cannot report if you follow the principles of what Article 8 Delegated Act, the draft at least, says. So that chiefly means also the challenge is you can only do those calculations based on numbers reported by the investee companies themselves. So there are questions around whether you can use estimates for taxonomy alignment. And there we're seeing potentially a mismatch between the taxonomy regulation, Article 8, and the SFDR regulatory technical standards, on taxonomy alignment, which the ESAs are finalizing, where in the SFDR context, the draft clearly states that estimates by third-party data providers on companies is usable, whereas the Article 8 in its current draft format is not. So these are things where Eurosif is talking to the European Commission to try and find a solution to that. Additionally, there is a question of the sequencing. As you can see, the expectation now on the Article 8 legislation is that for 2022, non-financial companies will not report on their alignment, so not actually on whether their turnover, capex and opex aligns with the taxonomy, but rather they will report on their eligibility. That means whether the economic activities they deploy are following within the codes, the NAICS codes, so the economic activities that are covered by the climate mitigation and adaptation delegated acts. Also discussions on the usefulness of disclosing eligibility, because you may see a lot of companies being quite eligible under the taxonomy, but actually also quite unaligned with the taxonomy itself. But it clearly seems as if this, sequencing of reporting eligibility in 2022 and only alignment as of 2023 is it's staggered implementation to smoothen the reporting cycle for non-financial companies, bearing in mind that as long as the climate adaptation mitigation delegated acts, which we spoke about before, as long as those aren't finalized, companies will struggle to know exactly on what they need to report. So what we're seeing is a complex issues around the sequencing of those various obligations. And we hope that the EU institutions will find a solution to smoothen that transition as well for financial entities. Moving on to our next agenda item for today. As you know, in parallel to the EU strategy being developed, in parallel to all the work streams occurring on the various pieces of legislations, there is the EU Platform on Sustainable Finance, which also is working on a number of different projects around the taxonomy and the further development of the taxonomy. We understand that early July, right after the publication of the strategy, we may see a number of reports published by the platform, chiefly around the use of a brown, or also called significant harmful taxonomy, and potentially also on whether we should have a social taxonomy. So these tools are being, these reports are being drafted and will be open for consultation to stakeholders. We understand at least for a significant part of July and August. And similarly, we may see by the end of July also publication of criteria around the 4 remaining environmental objectives that are still to be developed under the current framework of the taxonomy. And here I think it's good to see the distinction. Those 4 environmental objectives have been enshrined in the taxonomy regulation already, so we know that they are coming. On the social taxonomy and on this significant harmful taxonomy, these are more in the realms of ideas about how you could evolve the taxonomy regulation to include those dimensions in the future. As well, also to mention that actually since yesterday, over the next couple of weeks, the platform is organizing a number of webinars, practical briefings on the EU taxonomy, which will be scheduled every Monday from now until the 19th of July. And we very much encourage people to follow that, as it's a good source of information to stay up to date on what is happening on the platform. And finally, for today, last mention is the EU Green Bonds legislative proposal. So as we said, long awaited and probably to be released simultaneously with the strategy in early July is this EU Green Bonds legislative proposal. So what is it? It's very clear that it will be a voluntary framework. And what we mean by that is not that it is non-binding, but that it will only apply if an issuer voluntarily decides to ensure that his bond that he's issuing will satisfy the criteria of the EU Green Bond Standard and will be able to carry that name in marketing, in the way it's portrayed to investors. I think it's important to note it will be broad in scope, which means that it is as well available to companies and institutions located within the EU, so issuers within the EU, as well as issuers located outside the Union. So international issuers who may decide that for whatever reason, issuing a EU green bond under the EU Green Bond Standard may be an attractive way of raising capital for their expenditure and for their capital expenditure and future investments. Also to note that it will be usable by bond issuers as well as issuers of corporate bonds, securitizations, and sovereign bonds. So sovereign bonds can potentially benefit from the EU Green Bond label as well, which clearly enhances the scope of instruments that can benefit from this treatment. So what are the main requirements? And here the main point is that the EU Green Bond Standard will be closely aligned with the EU taxonomy. So it's meant to finance activities that are considered as environmentally sustainable economic activities under the taxonomy. That means that they satisfy the criteria, the basic criteria, which is to make a substantial contribution to one of the objectives, to do no significant harm to the other environmental objectives, to comply with the minimum safeguards for social and human rights matters enshrined in the taxonomy regulation, as well as comply with the technical screening criteria for each activity that are enshrined in taxonomy. So in that sense, if you want, it is issuing bonds for activities aligned with the EU taxonomy, which is again, on the one hand, brings regulatory consistency. On the other hand, as we know that, or at least data analysis shows that the current fully aligned investment opportunities with the taxonomy remain quite limited and scarce, we will have to see how successful the uptake is from this EU Green Bond label by the market. The issuer will face a number of requirements, transparency requirements, publication of a so-called European Green Bond fact sheet. That fact sheet will have to be then subject to external review by external reviewers, and those reviewers will be in turn again, have to register with ESMA, the European Securities Markets Authority, who will not supervise but verify that those verifiers and external reviewers are satisfying a certain number of minimum requirements in terms of quality control in their operations. Important to note, there will be a distribution of supervisory competences. ESMA is responsible for the register of verifiers, but when it comes to verifying that the issuers of the bonds are complying with all the requirements for a EU Green Bond, that will be done at national level. So national competent authorities remain responsible for that. This brings us to the end of our presentation today, bearing in mind that the next one of our edition in July will hopefully be the one where we can talk a bit more about the strategy will have just been announced. So that will be one where we'll have an opportunity to talk at much greater length about those things.